Good evening, everyone, and welcome to the July edition of Digging into the BI. This is where the members from the Maryland chapter and the DC regional chapter, and today we even have someone from Georgia and Alabama helping us out. Um, we get together and we look at the member only magazine, the Better BI, and we're looking at four different stocks today, two that come from the magazine and two that have come from inside our community. So we're going to be looking at Charles Schwab, Corpay, Mercado Libre, and Dollar General. We're glad that you're here. Sorry for the little delay in getting started. It was technology issues. We're still having trouble with getting this GoToWebinar to work right. But Cheryl, let's go to the next slide. So this is our standard disclaimer, is that we're doing this for educational purposes only. We are not recommending that you buy or sell any particular stocks based on our conversation here today. We believe, as Better Investing does, that you should conduct your own review and analysis of any company before you make a decision either to buy or sell a stock. We may own these stocks in our own personal portfolio or in our club portfolio. We'll try to alert you to it. But the thing is that please, again, do your own research. And also, if we are showing you any websites that we like or places that we go to for resources, it's not an endorsement or promotion from Better Investing. It's just what we use as people putting together stock presentations that we have found helpful. And you will see that this is recorded. We didn't get up last month. We're still learning how to move things through this whole system, and we will eventually get it up there. Next slide, Cheryl. So again, I see many of you are regular attendees, but in case you're seeing this as a recording, you want to know who Better Investing is. We're an investment education organization. We focus on long-term fundamental investing. There are many different ways to do investing. This is the way we do it. And all of the people here are volunteers from the Mid-Atlantic or friends of the Mid-Atlantic. So in other words, either from Maryland, DC, or Virginia. And like I said, tonight we have someone from Alabama and another person from Georgia. Thank you, Dan and Kent, for being here and helping us out. Next slide. So here's our YouTube page that I mentioned a little bit earlier, and this is where the recording will go. We're trying to boost this up and get to about 300 subscribers. I probably need to put up more than just one webinar a month to be able to generate a little bit more traffic. But here's what happens with this is that in return for that free recording, and please share it with other folks, is that we want you to like the video because that's how the YouTube algorithm works. Go ahead and share that video and subscribe to the channel. Those things will help with it. And what we do is that these all of the presentations are organized into what YouTube calls chapters. So just like if you were to look at a first cut at Better Investing website, for those people that are members of Better Investing, the first cut is sort of a paper version. This is an electronic one, and you'll be able to hear someone's entire rationale for why they picked certain things for their company. And that's how those chapters are organized. You can hover around the bottom of any video in YouTube, and if they have chapters, they will write out what that next segment is going to be about. So do that, and you can advance to just listen to the stock that you're most interested in. Next slide, please. So we haven't had any trouble in a while, and I guess we're going to have to redo these slides now that we have a new GoToWebinar. But the biggest thing in here is to be able to find the handouts, and now they're under a thing called materials. And so you'll be able to see that. You'll see that you have the completed slide deck and also the 4 completed SSGs in a PDF. You're welcome to share that with people in your club, people that are interested, maybe joining your club, or anyone else that you want to do it. That's certainly fine. Same with the slide deck. You can do that as well. But anyway, that's how you can find it. And like I said, I guess I have to make a note to myself and change the slide now that it's set up a little bit differently in GoToWebinar. Next slide. So why do we do this program? Well, we really did this, and the reason this started almost 5 years ago, in fact, I think it's over 5 now. Yeah, it is over 5, is that we wanted to be able to take people that were beginners or people that are uncertain of their judgments. And this really grew out of Cheryl and I teaching the SSG class here in the DC chapter, was a lot of folks, once they're done, they still don't really know how to do things. So we said, let's show you how to be able to do a completed SSG. We do 2 of them in core, and which is the basic setup, and then we do 2 in SSG plus. But we wanted to be able to show you sort of the best practices of a long-term fundamental investor. It gives us a chance to promote things in the 2 chapters, the Maryland and the DC regional chapter, promote our model clubs, and also be able to connect you, if you're interested in the club, um, to be able to meet up with other people here and to be part of the Mid-Atlantic community. You do not need to be a member of Better Investing to be here, nor do you have to be in Maryland, DC, or Virginia. We certainly welcome people from all over. Again, it's just a way to be able to build our community and to be able to share better practices with each other. Next slide. So in just over an hour, we're going to do 4 stocks. 2 of them come from the member-only magazine called the BI. That's the stock to study. Tonight, that is Charles Schwab, or the undervalued feature. That tonight is Dollar Tree, as well as anything else that you can find from either the BI magazine or from the website. They can come from personal experience, but ticker heat map is quite prominent. My presentation tonight came from a presentation I did to one of my clubs back in the fall, September of last year. So again, just different places you can find inside our community to take a look at it. Next slide. So here's how you can be able to find this information. You do not have to be a member of Better Investing to get to this. And you'll see the URL up at the top, betterinvesting.org. But you can go there. And again, anything with the blue underline is bold. That's a hyperlink. So if you have the slide deck, it will take you there correctly, right to it directly, I should say. But this can be seen by members and non-members alike. And these ideas, so Charles Schwab and Dollar Tree, were announced on April 20th earlier this year. You can already see that they have the August and September um, ideas up there as well, and we'll be looking at them in August and September. So anyway, keep that in mind. But again, a great place to be able to look. And if you want to, look at those stocks for August and September, come back here so we can have a discussion next month on those particular stocks. And if you're ready to talk about Schwab or Dollar General or Mercado Libre or Corpay, we're ready to talk about it as well. Next slide. So this is how, if you're a member of Better Investing, to be able to get notices from headquarters as well as from your local chapter. The way you do it is up where that red circle is, right below announcements under my account. That will open up the screen capture over on the center left, which is in my account. And that's where you get the email and product subscription information. It's the green circle. That opens up the screen capture over on the far right that's in the green border. And there are 2 places to do it. Where the arrow is to be able to sign up for your local chapter news. And that yellow highlight is where you can get stuff from headquarters. That's a BI weekly newsletter. But to be able to make sure those things stick, you have to hit the save changes, that thing, that highlight down in the bottom. So that's how you can do it. Next slide. So here's what the headquarters stuff looks for. This again is just for BI members. They highlight some of our national education programs, what's going on. We have a couple different programs there called Ticker Talk and Stock Up that take care of things. And then we also have first cut reports. That's when people from our community do a completed SSG and share it. This comes out the close of business on Thursday. And if you signed up and you don't see it, take a look at it through your spam filter. But we have a couple different things here. There's some really interesting first cuts to take a look at. But they also have things to be able to talk about. I believe, I forgot when I did that. That's, I think that was just sort of showing you how to use some of the industry studies. And there are some new features that I know in Lisa's presentation that Kent's going to talk about that are using some of the new financial ratios. So take a look at that as well. Next slide. This is up on Facebook. I didn't get anything up on Facebook this week, but again, a place to be able to look, a place to be able to share what you're doing in this community and the like. You can tag us, we'll tag you back. It's a way to be able to find stuff. I mean, Not everyone's on Facebook. They've moved on to a lot of other different social media platforms, but the fact is that this is one that's quite popular in our community, and take a look at it. Next slide. So this is the stuff going on in the Maryland chapter. It's kind of slow generally in the summertime, but their board meeting is on the third Friday. They do that virtually, so it's coming up this Friday. They also have a really good newsletter that goes out, and they have had several different programs. They're closing up their stock pickers contest that they run from the first of the year to just around Labor Day. But the thing is that it's a great way to stay involved. They've had a couple different speakers come on in. You don't have to be a member of the Maryland chapter to go to it. So a lot of them they like to do in person. So if you're anywhere in this area, even if you're in the DC chapter, please consider joining them. Next slide, please. Cheryl, to you.
All right, so we have our two model clubs meeting. On the third Tuesday is McNova, and on the third Wednesday is MCMC. Tonight we have the digging into the BI, and then we have DC chapter meetings. Please, you are welcome if you are in this area. We would love to have more visitors to the DC chapter meetings. And we are going to start a new education presentation in the chapter meeting as well. So stay tuned for that as well. Back to you. Nope, back to me again. All right, here's the Model Investment Club of Northern Virginia, of which I am a member. I'm that floating head all the way in the back center there. It was started in 2008 with 14 partners. As I said, it's the third Tuesday of the month. Next one's July 21st, and the time is from 7 p.m. to 9 p.m. It's virtual, and there's your link. Education is to be discussed, and the stock study will be Corpay. And there's our POC if you do want to get in touch with us.
And this is my club. This is the Montgomery County Model Investment Club, commonly known as MCMC. And we meet on the third Wednesday of the month, so that means we're going to be meeting in 2 days. There's our link. You're welcome to join us. We're doing an industry study of the insurance companies, and then we're doing a stock study on Microsoft to be able to take a look. And there's a picture. What we do is we get together once a quarter with several other clubs and turn it into a potluck. So that picture is not just the people from MCMC, but that's like 3 or 4 different clubs. It's a great way, particularly now that post-pandemic, a lot of us are doing things virtually, to be able to get together and see people in person. So we do that on the third, and we do it on the second Saturday of the month, 4 times a year. Our next one's going to be in September. If you live in the DC area, let me know, and you're welcome to come, particularly if you bring food. We always welcome people who bring food. Next slide. To you, Cheryl.
All right, this is another club that I belong to, and it was started in 2001, which currently has 7 partners. It's the third Friday of the month. Next meeting is this coming Friday, the 17th of July. Starts at 6:30, usually ends around 9, although it can run a little longer. It's virtual as well, so there's our virtual link. And I'm doing Mercado Libre again. So, and there's our point of contact if you do want to contact us. And education has not been labeled yet. And we're going to celebrate 25 years in the fall. And so we have an anniversary with a certificate.
Well, the education is going to be Natalie. We just don't know what Natalie's doing.
Right, right.
So
anyway. Yeah, we rotated around to the different members.
Back to you,
anyway, this is a program that BI started. They did have one prior to this, and they kind of morphed into this one, where clubs that are looking for new members can put in their information, and then individual investors who are looking to join a club can go through the different information that the clubs put out and see if they're a match. So please, if you are in either camp, please go to, it shows here, you go to investment clubs and then down to the Club Connect, it's circled in red. and you can fill out a form, and hopefully you will find what you're looking for.
Exactly. So
Okay,
the whole point of digging into the BI is to, surprise, surprise, dig into the magazine and dig into the BI. Take a look at this. And these many of us still like to be able to get the paper version to be able to look at it, but you can get it electronically through your computer, laptop, or tablet, smartphone, and take a look at it. So there's a lot of different ways to view it. But this is what we're going to do is we're going to show you some things that are in here. Let's go to our next slide. And the first thing I want to be able to point out to you is that if you are trying to be able to get onto this for your laptop or a smartphone or so, is where that green arrow is over on the left-hand side. That's where the Better Investing magazine for mobile devices. It's a different sign in. Go in there. They can walk you through it, or reach out to headquarters and they can sort of take you through it. The second one, the red arrow that points to the analyst reports and other resources, that's where the additional information is for the featured stocks. So again, tonight the featured stocks are Charles Schwab as a stock to study and Dollar General as the undervalued feature. When they say in the article that there's additional resources online, this is where you find it. So you click right here and take a look at it. But if you want to see the actual magazine, look in the smack dab in the center where you have the green background. It says View Magazine Issues. Click on that, and that will take you to all the different magazines, the archives, as well as a current one. And you can see it either as a PDF or as an e-magazine. Let's go to our next slide. So what we're doing here this time is that they sometimes have been putting in some old classic articles from the past. And the person who originally wrote this, Nancy Isaacs, was one of the people who was really big when I came in 25 years ago. And she's able to really break down sort of the understanding of the risk and reward. So if you have trouble, and I know some people do when they're setting their high and low prices to be able to get it, she, I think, does a really easy job of being able to go walk through it to take a look. So if you have some people in your club that are struggling with it, or you yourself are, take a look at this article. Next slide. So here's again, it's usually kind of slow in the summertime for stuff, but I do know the Georgia Fair is going to be in middle of August. It's going to be online. It's $25. You can go to their website. You can go to the Georgia chapter, take a look at it. They have a host of different people speaking and the like, and you can see the entire lineup. And
yeah, I
it's
was
pretty much all
talking
day.
to Bakul from the Golden West chapter. He's doing some very interesting classes there at the Georgia chapter fair. And so I'm definitely interested in attending myself.
Very good. Next slide. So now that we've done all this, we're going to now do two stocks in core, although I think Lisa's is mostly in plus. Lisa got pulled away with work, so we're having a pinch hitter. Our favorite Alabamian Better Investing member, Kent DeYoung, is going to be able to pinch hit and talk about Charles Schwab for us. And then I'm going to talk about Corpay, which I found, like I said, came from a stock presentation I did to my club back in September. So let's go to the next slide. And then Kent, you're on.
Hi, this is Kent DeYoung. I am playing Lisa Faust line this evening. So just so you all, if you haven't taken a look at the BI discussion on Charles Schwab, I would highly recommend you do it. There's some very interesting things in the BI magazine. First thing that I noticed in reading about the stock to study this month is that Charles Schwab has his largest revenue source banking activities, and so that was very interesting. And those banking activities primarily are surrounded or contained around investor services, but it was a real interesting read. So we'll spend a little bit more time on that. Next slide, please. Okay, so as I was mentioning, the BI magazine has this information. I've talked a little bit about it already. The thing that has been most interesting about Charles Schwab is that they have been doing a tremendous amount of acquisitions. So in addition to the growth that they've got from sales, managing assets, and various other investor services activities, they've also been acquiring new, smaller companies and some larger companies. I think you all might remember TD Ameritrade back in 2020. Next slide, please. Okay, so the stock selection guide, you can take a look at that, and that there's a section of, or there's a handout for the stock selection guide. So that's what you'll see on that stock selection guide, and along with some judgments. So the next slide, please. So Schwab is, as I mentioned, a large retail financial services with banking as one of its core activities, as well as investment management. That stuff is here, but you can see here that the sector is financial services. So this is in the same sector as insurance and banks. And so next slide, please. The large corporation that it is, Charles Schwab started back in 1963 and has progressed through the years. In the year 2020, you can see that TD Ameritrade merged with Schwab, or Schwab merged with TD Ameritrade. But you can also see that that has happened. There's been other things that have happened that have impacted Charles Schwab. The 1987 Black Monday was a real big challenge for the company, as well as the SEC mandating commission rates for securities transactions back in 1975. Next slide, please. So as you can see here, there are a little over $13 trillion with a T total client assets being managed by Schwab. And on the average, they also are handling about almost 12 million daily trades back and forth. They have 2.3 million banking accounts. And I did mention that banking is a large part of their revenue. And they also have their own sets of mutual funds and exchange traded funds, which are totaling almost $1.5 trillion. And these are all numbers as of the either by the end of March or May. Next slide, please. So as we talked about in a little earlier, as of the first quarter of this year versus the first quarter of 2025, things have grown just a bit. So the core assets, core assets of the company have grown by 2%, but the total net revenues, which is one of those things that we're most interested in, have grown 16%, because those total net revenues then allow us to identify what kind of earnings, and as we all know from some of our studies, that the price of a company follows the earnings, and the earnings follow the total net revenues. So here, the total net revenues have gone up by 16%. New accounts have gone up by 10%. Also a worthy thing to take a look at. Next slide, please. Okay. In 2026, in the first quarter of 2026, you can see that one of the things that's happened is that the Forge company has been merged and essentially acquired by Schwab. That actually finished off, closing off here in March. And then Wealth.com is also another company that Schwab has been acquired. The thing that I want to also point out here is, I think I saw it. Oh, yes, there it is. The teen investor accounts. This has been an area to get young people more interested in investing, something that all of us in Better of Investing have been attempting to do for a good long time now. And actually, one of the things that if you were at the Better Investing Conference in Chicago this year, you'll notice we had a whole lot of young folks walking around, a large number of young people wandering around. But we also had, for the first time, we had, I think, over 100 new people. So the first time that they had attended a Better Investing Conference. And so Schwab has been very focused on teen investors, as has Better Investing. Next slide, please. There we go. All right. So artificial intelligence, that seems to be the watchword for many things happening these days. Schwab is no exception. So they have been using artificial intelligence to maneuver their way through helping folks do analysis work on their investments, as well as helping Schwab itself manage accounts. Next slide, please. Okay. And then here, you'll see that we've been more detailed information about how AI is being used by Schwab, which I alluded to a little earlier in the previous slide. So we are building more client relationships by helping folks learn how to do their investing better. If you listen to any of the Schwab in advertisements in various places, you'll hear about the Think or Swim coaching mechanism that they've been putting together and helping out with AI. Next slide, please. So here's a value line. You'll note, and this is very interesting, because you'll note here that according to the value line, that little black dot is the price of the company as of whenever this value line was. I think I don't have the date on the slide. But anyway, this little black dot means that the price is a little bit above what the cash flow would indicate would be worthy of the price at $92. Keep that in mind as we continue our analysis. Next slide, please. Okay, so here you can see the peer comparisons. This is something that Better Investing does, and you'll see some of these comparisons are like gold companies, as well as some other companies. But you'll see that Schwab's historic sales have been slightly increasing, and you can see those there in the black line. The next slide, please. Same with sales, although in this case, the sales have been increasing. The earnings per share, my bad. The earnings per share have been increasing a little bit faster than the sales have been increasing at a rate of nearly 11%, which is good for a company the size of Schwab. Again, this is a large company with revenues greater than $10 billion. Next slide, please. Okay, and here we've got pre-tax profit. You will note that Schwab is, since 2022, been higher than the industry average, and as far as the size of the company. But you'll also note that pre-tax profit since 2023 has been increasing every year since then. Next slide, please. All right, and this is giving you an idea of what the analyst Lisa has decided on the future estimated growth rate for Schwab, both in sales and earnings per shares. You'll note that the historic sales, she's estimating a little lower than what the historical growth rate has been, as the earnings per share has been estimated a little higher than that. This factors into how we end up with our estimated future earnings prices and whatnot, and what our buy, sell, hold range is. Next slide, please. All right, so price to earnings ratio, you see that it's very consistent in that the price to earnings ratio, with the exception of 2023, high price to earnings ratio has been around 30 or below, and been going down. So, and in 2025, the price to earnings ratio for the lowest was around 14.2. So we've got those numbers there to consider when we would actually decide a price. Next slide, please. Okay, profitability ratios. Now, one of the things that Kevin mentioned earlier is this, as a banking company, we look at things called return on assets for a financial company, as well as the return on equity. And you'll see those new ratios there at the bottom line here in this particular slide. You'll also find these on the stock selection guide. Next slide, please. Okay, in the most recent quarter, also you'll see, as far as the financial structure, which is quite interesting, is that they are taking into account goodwill divided by the amount of equity in the company. And goodwill is a kind of an intangible asset that companies carry when they acquire other companies. And so you'll see here that the amount of goodwill percentage to equity ratio has increased from 9% in 2016 to 29% in the most recent quarter, but it was at as high as 44% in 2022. So it's on its way down. This is a number that I personally look at and think, how much of the money can be, how much of the earnings per share can be adjusted by management playing with the numbers. Next slide, please. Okay, so in conclusion, and you'll see this on the stock selection guide when you pull it up from the handouts, you'll see that Schwab's a large company. Lisa has decided that the company is on sale, which you'll take a look, and it's slightly on sale, but it's still a really worthy candidate for your consideration for study. Next slide, please.
Okay, thanks, Kent, for jumping in. But we had a question, and I think since we're in the middle of it, let's go back to it. Carol was asking this. Cheryl, can you go back to slide 33? You can just click, you can hit 3 and enter. There we go. And Kent, do you want to talk? What Carol was asking about was, can you tell us what that, when you were talking about the black dot that you're referring to, can you, I believe it's that price. So Cheryl, can you sort of circle the black dot?
Yeah. My cursor is not helping any. So there you go. That's the black dot.
So it's that's the current price, is it not?
That is correct. Yeah. Karen, do you see that? Now that is
Karen, you're right.
Karen. Yeah. Okay. So Karen says she's got it. So thank you for asking. That's a fantastic question. So I just breezed right over that. So thank you for stopping and asking about that.
Okay. Thank you again for pinch hitting there, Kent. We appreciate it. All right.
You're welcome.
I'm going to be able to talk to you about Corpay. And this is a stock I did for one of my clubs, Happy Destiny, back in September. Let's go to our next slide. This is sort of how we come and get ideas in Happy Destiny, is we present 3 different stock ideas, not very elaborate, but just like where you found it and what you like about it. And then from there, that sort of leads you into the story. But then what we also do is then we put up the visual analysis, hide the name of the company, and vote on it again. And so what happened here is it was really close between Arista Network and Corpay. And we ended up selecting Corpay. And it was originally called FleetCor. And Kent actually did digging into the BI all the way back in 2021 on FleetCor when it was called that. And it's also up on the first cut. So there's where how I sort of came up with it. And let's go to our next slide. So what is Corpay? They're in the S&P 500, which is kind of surprising because you wouldn't think of it as that. It's got a medium sales size, but their technology infrastructure, what they really do is they started out basically giving company gas cards to everyone and tracking it. And from there, they've acquired other things to go with it. So that they're now doing all kinds of commercial cards. They're also doing, besides the fuel cards, being able to help manage business travel. They're really designed for businesses dealing with other businesses in terms of paying stuff and the like. And so they've, again, been acquiring things throughout what they've been doing, and you can see some of the metrics there. But I found it really kind of interesting because I didn't really know much about it until Kent did the original Fleet Core, like I said, 5 years ago. Next slide. So again, if you see some of this stuff here, this comes straight from their company presentation. You see corporate payments, you see in the middle vehicle payments. That's really how they were doing stuff with like gas cards and everything else that goes on with it. And then they also, it's a way to be able to protect the company to make sure that they're not using gas from the company in their own for personal vehicles and be able to track what's going on. And they also can help them with lodging and payments. And they do some of this in conjunction with MasterCard, but they're specializing in working with these businesses to be able to help control these expenses, manage it, and be able to help them figure out how to be able to handle things better. Next slide. So what it is, it's sort of considered, it's in a fintech. It's a B2B or business to business payment system. Again, they've grown to doing stuff internationally. So now they're dealing with cross-border payments and currency fluctuations and everything else. And that's some of the acquisitions that they made along the way. Again, corporate cards, expense management. They've also been doing more and more work with MasterCard, as well as with other fintechs like Jack Henry, which specializes in banks. Um, and so those are some of the things that they're doing to take a look at it. They've taken something really kind of mundane and been able to turn it into a successful business. It's in the S&P 500. Next slide. So this is stuff actually from 2025. I couldn't find the 2026. So this is what I did a little bit a year ago. But what I found kind of interesting, and this is sometimes when you look at the same company multiple times over several different time periods, is that I found that they're really kind of consistent in what they're saying, which is really encouraging to me as a future owner of them, is that they seem to be clear. They don't equivocate. They don't sort of try to play a three-card money game with you. I found a lot of their stuff here. So if you see on the financial strength column over on the right-hand side, organic revenue growth of 11%. They think that they're going to continue to get EBITDA margin improvement. And then the FCF, which is free cash flow, generating about $1.5 billion. So again, they have a range of different products that they're doing. And again, they've been really pretty clear and consistent on what they want to be able to do. So I like that. Next slide. So here's sort of their thesis, is that they think that there's so much going on right now in terms of, rife for employees to take advantage of stuff if you don't manage it correctly, that they can be able to sit there and track your fuel use, your vehicle use, your lodging, any kind of business to business payments that you have to do. And that this is really kind of growing, that they think overall that they have this is a $135 trillion addressable market. Remember, they're only a $4 billion in annual sales. That may be a little bit optimistic in terms of the total addressable market. And again, it's highly competitive, so there's going to be all these other people in there as well. Some of them will also be like MasterCard and Visa and all the business interests that are going on. But the fact is that they have sort of a niche that no one else really seems to have. I like that. It's an area that a lot of people don't know about, and they're consistently getting revenues, sales and revenues and earnings in the 10% range in an organic thing. So that's really encouraging as well. So again, it seems to fit overall what's going on. Next slide. So again, I found this on Seeking Alpha. And again, how they talk about this company, how it started out with fuel cards, and now how they're basically helping to manage a lot of these business to business payments all the way across several different platforms. And they did this because they built out businesses, they've done proprietary software, as well as they've really acquired a bunch of other companies along the way to help it. And it's going to show up on their visual analysis when you see the debt levels. Next slide. So again, here's some more on their total addressable market. They think that the overall global spending for employee payments is 30 trillion. Business to business payments are 115 trillion, and that these cross-border payments are 30 trillion. So you can see overall that they're looking at about 175 trillion. That's just even higher than the 135 they were saying on a slide from a year and a half ago. But the fact of the matter is that they have a really small share, and they're growing steadily. So that there's a long on ramp for them to be able to continue to grow. Next slide. So here again is in the core SSG. A lot of people say I don't like to use core because I can't see all of the visual analysis on one page. And the fact is you can see it, as you can see here, when you're in that first setup on analyze growth, and you can look at that third step. And if you take a look at it, there's our up, straight, and parallel. The one thing that is a little, I don't want to call it troubling, but disappointing when we're trying to be able to buy something when it's on sale. This is trading near its 52-week high. If you see where that red dot is, those black eye bars are the high and low prices, 52-week high, low prices for each year. And the red is where the current price is. When I originally presented this to my club, it was on the inverse. It was down at the bottom. Next slide.
5 minutes, Kevin, 5 minutes.
So evaluate management. I'm going to do this. I just basically took the industry average. So that's the one that's going to be in blue, and black is going to be our company. When you look at this, particularly in plus, you're going to see a lot of the evaluate management not looking good. But keep in mind, look at that pre-tax profit margin. It's 36%. That's 36 cents out of every dollar is going to be pre-tax profit. That's enormous. So let's not poo-poo that going on. Next slide. Here it is with return on equity. Return on equity of 30% on a 5-year average. Now it can be impacted by debt, and that show up here. But still, overall, we're trying to look for something that's in the high teens, and we're going to be able to see that with this particular company. Next slide. Debt to capital. Again, the industry average is really sort of coming down, but if you look at them, they have continued to grow. And whether it is, if you look at it between 20 and 21 and 22, a series of acquisitions that are going on. And you'll see that when we hit the next slide, which let's do that now. And here is their not only their target market, but also the acquisition history. I always try to find where their acquisition history. You sometimes have to poke around a lot, but you can see all the different places where they've been acquiring and the like. Let's go to our next slide. So one of the things I can do is that when you see that a company is making a lot of acquisitions, and there's a couple ways that they're going to be able to pay for it. They're either going to have to use existing cash, which means their earnings are going to crater, which means you're going to have a really, really high PE. You're going to see really high debt levels, and then you may also see that they have to dilute shares, and sometimes they do a little bit of all three of them. But that's basically what you're going to see with any acquisition. Here, what you're seeing is that they're not diluting shares, that red box in the center, and it's getting smaller and smaller. They don't pay a dividend, so that's one of the ways they do it. But they have acquired debt, and it does show in terms of their bottom line with the earnings, is it doesn't always sort of move perfectly because, again, some of these acquisitions that are going on. But that's a way to sort of understand what that visual analysis and its impact, particularly on evaluate management. Next slide. So again, future sales, I went with 11%. And all the historic has been 9.7. I'm just sort of going with what they've been sort of guiding at 11%. I think they've been pretty consistent with it, and you can see that the lines look like that. So 11 it is. Next slide. There it is again. I sort of followed exactly with what they're doing. The historic is around 16 or so, or 15. The analysts are going with 16. I went with 12. I just sort of felt that was consistent with what I've been seeing all the way through on everything else. If they continue to generate a lot of excess cash, I expect that they'll either acquire more companies or they'll pay down their debt since they don't pay a dividend. Next slide.
2 minutes,
High
Kevin. 2 minutes.
forecasted high price. If you see this, I took a high PE of 25, a low PE of 16. That gives us those prices of 736 and whatever, I think 257. So you get an idea, but it's pretty much just followed exactly what you see with the PEs that are there. Next slide. So that gives me a 4.4 to 1 upside downside ratio. It's clearly in the buy range. Next slide. And it gives me a 5-year potential. Again, it doesn't pay a dividend, which is why that line on the graph is a straight line, because that's the zero line, is that it's just over 15% here. So again, it's hit a lot of our key metrics in terms of going with this. So let's go to our next slide and we'll do our conclusion. So we got a medium-sized steady growth company. This is not spectacular. You're not going to see all that. I think their management metrics are good, but not great. There's a lot to like about it, but again, some of the concerns is that they do acquire a lot of stuff, so they do carry some debt, but they seem to generate more than enough cash flow to be able to pay off, to basically be able to continue to dilute their, to be able to buy back shares and be able to use money to be able to acquire additional companies. It's kind of fairly valued. It's right about at that same point. Its current PE being 21.2. If you look at it, it's right in the middle between the forecasted high and low price. Not too bad. A little bit, so it can be slightly undervalued. I think it's a buy up to 366. It's at 353 right now. And to give you an idea, when I presented this in September of last year, it was 305. So I think most of us would be happy in this last year if we had gotten 15% return on our investment. But I think this is a candidate for review, and if you want to, take and investigate it and see if it's something you'd want to add to your own portfolio after you do your own study. Next slide. And we're ready for our next group of people, which is going to be Cheryl talking to us about MELI. And eventually, our newest presenter, Dan Bishop, is going to be able to talk about Dollar General. So over to you, Cheryl, and take it away.
Alrighty. Thank you, Kevin. I found Mercado Libre on the BI ticker heat map, and there is a picture of their ecosystem, which I shall talk about very shortly. Okay, Mercado Libre was founded in 1999 in Buenos Aires with a vision to build an e-commerce company focused on serving the fast-growing Spanish and Portuguese-speaking markets in Latin America. Just prior to the company's 2007 IPO, Mercado Libre achieved what eluded most internet startups: profit. It had recorded $52 million in revenues and $1.1 million net income for the full year in 2006. By 2019, Mercado Libre was the largest online commerce ecosystem in Latin America based on unique visitors and page reviews. Over the past 20 years, with the Mercado Libre marketplace as the hub and engine, the company developed additional business units to provide payment solutions, logistics, financing, advertising, and software services. Key takeaway is by combining the e-commerce payments, logistics, and credit into one ecosystem, Mercado Libre creates multiple growth engines and a strong competitive moat. They also have a long runway for growth. E-commerce and digital payment adoption in Latin America remains lower compared to developing markets, creating a massive opportunity ahead. Here's some operational and financial highlights. Got some new abbreviations there. GMV stands for gross merchandise volume, which is the total monetary value of all goods and products sold through the Mercado Libre marketplace platform within a specific time frame. And this is a year, so they're up year over year, 42%. Where are we now? The TPV is the total payment volume, which is the total monetary value of all transactions processed through the Mercado PayGo platform, and they're up 50% year over year. Also key is the net revenues and financial income, which is up 49% at 8.8 billion, and the adjusted free cash flow in US dollars is 56 million. All right, we're going on the post-IPO compound annual growth rate, went from 26% back in August of 2007 to 31%. So that's the 10-year compound annual growth rate. And this is mostly through democratizing commerce and financial systems. From 2020 to first quarter 2026, net revenues have increased by 49% to 31.8 billion. So we have here a multi-engine ecosystem. Again, you have the GMV, which includes the marketplace, ads, logistics, and classified, and they're up 71 billion. The TPV, again, is the online payments, the QR codes, and the in-store payments, which is up 204 billion. Then you have the credit portfolio, which is daily banking, savings and investments, lending, insurance, which is at 15 billion. The e-commerce leader in Latin America with an unmatched audience, best-in-class UX, lending and assortment and brand trust is up from 7 billion in the gross market value to 71 billion as of the first quarter of 2026. So just in a little over 10 years, they have been growing consistently faster than the marketplace. The ads revenue, which is 2% of market share back in 2020, has grown to 1.7 billion, which is 10% of the market share, again, in first quarter 2026. And so it's growing at 4 times the Latin American market. They're building the Latin American largest digital bank with competitive advantages in distribution and underwriting. And their digital bank system includes daily banking, lending and credit cards, savings and investments has grown by 35.8 billion, again from 2020 to first quarter 2026. Now the fintech, which is financial technology, refers to digital platforms that automate and enhance financial services. And that has grown from 204 billion in 2020 to first quarter 2026. MELI Plus has the most comprehensive loyalty programs, combining with other programs to generate high GMV, TPV, and purchase frequency. And this, again, leads to that purchase frequency, so people coming back time and again, which is important in any kind of business. MELI Logistics Networks has 3 times the network area, increased from 1.6 million in 2020 to 6 million in first quarter 2026, with most items delivered within 48 hours. Brazil continues to accelerate, driven by strategic investments, while growth elsewhere continues to be strong. And you can see here Argentina and Brazil, as well as Mexico, has increased in items sold, while Argentina leads in the gross merchandise volume. Assets under management, which deals with, as Kevin and Kent brought out, with financials and credit portfolio, continue to grow strongly in quarter 1 of 2026, as engagement with Mercado Pago grows. Total cash, restricted cash, and investments grew from 17,930 million in quarter 4 2025 to 18,810 million in Q1 of 2026. Uniquely placed to capitalize on structural changes taking place in the advertising industry, the leading platform in Latin America retail media market, which is projected to more than double to $6 billion by 2029. Financial inclusion in Mexico is more than a decade behind Brazil, with just half of the population having a bank account and less than a fifth having a credit card. In Brazil, there is still more disruption to take place, with 4 incumbent banks accounting for 59% of credit operations and approximately 200 billion parked in low-yielding accounts. Mercado Pago is well placed to disrupt this scenario as a leading fintech in Brazil, Mexico, Argentina, and Chile. Mercado Pago is the largest fintech acquirer in Latin America. Their market share is low, and they see huge opportunities to attract and retain new merchants. They're well positioned to differentiate payments processing service by leveraging their ecosystem to offer loans and software solutions that help merchants manage their business. And you can see MELI is the yellow line there, which is ahead of the SPX index, the NDX index, and the Magnificent Seven. This is the value line, and you can see that the 18-month target price range is in the annual total return is set to double from the low to the high. The PE ratio up on the top of 40.6, you draw the line down to the annual average annual PE ratio, and it's coming down to 28. So their PE is reducing over time, and we'll see that again in a few minutes. Again, here's the dot where the current price is, and the value line is below that, so it's a little bit over. It's overvalued right there, and the operating margin is increasing from year to year, which is a good thing, and the income tax rate is staying stable. And here's the bottom part of the value line. They've got a B+.
5 minutes, Cheryl, 5 minutes.
Thank you for the financial strength, as well as 90% for the price growth persistence. It's saying here that the price has declined in price since their January report. Investors may have concerns about the economic outlook and increased competition. Projections suggest that this issue holds good appreciation potential for the next 3 to 5 years. Conservative investors should note that this stock trades at an elevated multiple and can be volatile. So here is Morningstar, and they're showing here the fair value is projected to go up to 2,150, sorry, with the last close being 1,841. And here is some of its peers, being PayPal, Alibaba, and Amazon, and also having higher fair values than their, higher than their latest close looks like for the majority of the competition as well. Bulls say underdeveloped consumer finance markets in Latin America could be an opportunity to expand its credit revenue faster than expected. But again, there is increasing competition amongst fintech lenders, which could lead to a sudden deceleration in credit revenue growth. Oops. All right. Here is Manifest Investing, and they are saying that the Chronicle is both the blue line, which is quality, and the red line, which is par, are increasing and currently within the sweet spot, with the green price bars down from 2025. In the SSG graph, sales and earnings are up straight and parallel within the space between those two lines narrowing, meaning that expenses are decreasing. While ROE is below its 5-year average, it is still in the 30%. And 66 is the 5-year average for debt to capital, but we'll see in a minute that that is not far from the average for the industry as well, because it is the mainstay of their revenue comes from lending and banking. Here we have the part 2, what used to be page 2 of the SSG graph. And here the 5-year average price earnings, 50.7, and slightly lower for the current price to earnings ratio, with a decreasing both high and low PEs. Zoning, you can see it's $14.95 to $19.46 for the buy zone. So keep that in mind. The current price, $1,852.22, upside downside of 4.1 to 1, with a 12.3 high total return. Here's the
2
peer
minutes, Cheryl, 2
comparison.
minutes.
Thank you. Here's the peer comparison. And again, we have Amazon, Alibaba, and PayPal. And you can see most of these. Mercado Libre is here the double for the historic sales and more than quadruple for the historical earnings. They are still in the lead for most of the well, they're in the running anyway for the pre-tax profit on sale. They're no longer in the lead there. But in debt to capital, they are high, but they're not far from where the rest of the peer group is. And based on equity, 66.2%, more than double of the rest. Here's our potential gain versus loss. They're in the green buy zone there with a 4.1 to 1 and a 78.2% appreciation. And in conclusion, MELI is a large-sized company with Morningstar financial health grade of C. It's a well-managed company. It's currently slightly undervalued, trading below the 5-year average 50.7, as I pointed out, and it's a buy up to 1,946.2 with a buy price of 1,640 to satisfy the 3 to 1 and the 15% total return. And as I said before, the price had been lower as of a week ago. It was in 1,700. So there is some volatility in the price. And it's a worthy candidate for your research consideration. So please do your research prior. Thank you.
Thank you, Cheryl. And last but certainly not least, Dan Bishop comes from the Georgia chapter. He's the 44th different presenter in the history of this program and the 16th different one this year. So Dan, you have Dollar General, the undervalued feature. Take it away, and thank you for being here.
Okay. Can y'all hear me?
Yes, we can.
Okay. Yes, my name is Dan Bishop. I'm down in the Georgia chapter, and I'm actually a member of 2 investment clubs down here. Middle Georgia Investment Club. I've been a member there for about 12 years, and then I'm a member of the Acme Investment Club, which is a model club in the Atlanta area. So I've really enjoyed my Better Investing Investment Club experience. Dollar General, the stock that I'm looking at, it was profiled in the June-July issue of Better Investing magazine. So it was an idea that was presented there. Next slide, please. Okay, an overview. It was presented in the summer's joint issue, June-July. It is a large company. It's over $10 billion in sales is the definition of Better Investing. Actually, their sales are $42 billion. It is listed on the New York Stock Exchange. It's considered a consumer defensive sector, and discount store industry is the industry. The stock is $118 and change now. When I checked it this weekend, The 52-week range has been 95 to 158, so it's about mid-range. Historic sales growth has been 8%. The historic earnings per share growth has been 3.6%. And the PE range over the last 5 years has been 14 to 27, and I've got it on the last page, but the current PE is 16.46. So it's favorable there if you're looking for that. Next slide, please. They were founded in 1939 in Kentucky. They're now out of Goodlettsville, Tennessee. They're the largest dollar store in the United States, and they've got over 20,000 stores across 48 states. So they are quite a presence. Total sales $42 billion in 2025, and they tend to be in rural and low-income markets. And their niche is places that are underserved by the big box retailers like Walmart, Costco, those folks. Next slide, please. Okay, and it wouldn't be a Dollar General presentation without a photograph of a Dollar General out literally in the middle of a cornfield. So they are, hopefully, as we have traveled around the country, we've all seen this type of image. Next slide, please. The sales mix is that they've got 11,000 stock keeping units. 2,000 of those are priced at $1 or less. 80% are consumables, 16% seasonal, home products 5%, and apparel 3%. And they do have a pretty robust private label program. 20% of their sales are private label. Next slide, please. I like to look at FinViz. I think FinViz gives a pretty good idea of what the stock price has been doing. And you see generally it's been on a pretty good uphill trend, except for the last 2 or 3 years. And those last 2 or 3 years looks like it stumbled, the stock price has. So that sort of concerned me and made me do a little bit of digging. Next slide, please. Here's the graph from the SSG. See that the sales are generally positive, up straight, and you'll see again that stock price, which are the vertical black lines, has stumbled the last 2 or 3 years. But the earnings per share and pre-tax profits, the pink and blue lines they've sort of been down. That probably is in the stock price there, but you'll see that the stock price now is about mid-range for the 52-week. Next slide, please. I started digging into what is causing the stock to be not as good maybe as it should be. Their financial performance has been a little bit lacking, as you see there. They have really expanded 450 new stores in the last year. They've got a total of 4,200 stores, so they've got a huge physical base there. IT spending, I thought, well, this was an interesting figure, between $1.4 billion and $1.5 billion this year. So I imagine that probably a fair bit of that is their supply chain management system, where they're managing their inventories pretty well, I think, and they seem to do a pretty good job with that. And then the macro environment, we've had some inflation due to fuel prices, and then tariffs have been up and down and sideways. A fair bit of Dollar General's merchandise comes from China, so you do have a tariff risk there. Next slide, please. Further disappointing forward guidance. their consumer base is stressed, and then they are transitioning to a new CEO the first of the year. So that has caused some problems. And then they've got some tax credits that are expiring, and then also the tariff issue. Next slide, please. And in summary, this is a good consumer defensive stock for your portfolio. It is the dominant provider in this industry with 20,000 stores, and it's below Walmart. And there's still room for growth. The financials are strong and growing. The current stock price is mid-range over the last 52 weeks, although the last 3 years have been sort of rocky. PE is a current 16.46. When I do the SSG, it does come back above. And my SSG is attached in the handouts. And so I think it's a good consideration. However, please do your own research. And Kevin and Cheryl and Ken, thank you for including me.
Thanks for having. We're glad that you finally said yes. It only took me multiple times of twisting your arm. Hopefully you didn't get dislocated elbow out of it.
Thank you, Kevin.
Anyway, so what we like to also do is we like to go back and ask each of our presenters to be able to tell us where they think the stock sort of fits on the life cycle. And we'll talk about that in just a moment. But again, there's an overview of all 4 stocks that we looked at. Let's go to the next slide, Cheryl. And again, this comes from T. Rowe Price, where he sat there and said that corporations, sort of like human beings, go through a life cycle of growth, maturity, and decadence. And so we'll start here. And Kent, you, even though you were just reading Lisa Foslin's presentation, I think you have some understanding of Schwab, and she put it right there smack dab in the middle. What do you think?
Well, I think actually that's a pretty good place for that to be. They've been doing quite a lot of acquisition, which is part of that growth company, but they've also had some pretty robust organic growth in addition to those significant acquisitions. So I think that's a fair place for Schwab.
Okay. And I put Corpay right there, sort of in the middle, a little bit closer down the explosive growth side. Again, remember, internal growth that they've been saying is around 11% for revenue. And that's pretty dang good. And remember, this is in the S&P 500, even though it's a medium-sized company by our definition. But the fact of the matter is that it's there. It's not at the beginning of the explosive growth, but it's right there, and it can sit there for a long period of time. Cheryl, tell us why you put that location for MELI.
Well, MELI has been around, as I said, since 1999, and they're with their IPO coming in 2006. And they still have a really long runway to build on, especially, as I said, with Mexico, with people not really just starting to adopt to having bank accounts and using credit. So, but they still have been around, and they've got also a lot of competition in terms of PayPal and Amazon and Alibaba. And so I think there is a good spot for them with the risks of the competition and the economy in Latin America, but still having, you know, a good road to go to keep building.
Okay. And Dan, tell us why you picked that location for Dollar General.
Dollar General, I put in the mature growth arena. Just the number of stores. They do a good job, I think, of managing their inventory, and they're in a good place. But they're sort of in the mature category. I would list them.
Okay, very good. All right. So once we're done with this, let's Cheryl, let's go to the next slide and let's release the poll.
All righty, we'll see how this works.
We're still learning how to do this, folks.
Well, they changed everything. So here they've got a button that says launch. So let me know if you can see it.
Yeah, I'm seeing votes
Great.
coming in. I don't know if other people, I'm seeing it perhaps because I'm an organizer.
No, I'm seeing it's growing as well. So they
Yeah.
didn't used to let me see that part, but now that's changed actually, which is a good thing.
And once we sort of get done with this, we do have a couple questions up in the queue. And I did see a hand come on up, which is good. I'm glad to be able to see we have several different questions coming on. In fact, why don't we start with these? Is that
Cheryl, where is Mercado Libre headquartered?
Buenos Aires.
Buenos Aires? Okay.
Actually, I looked it up. It started there, but it's actually in Montevideo and
over in Uruguay?
Yeah. And it's not an ADR. An ADR means that it's been it sells in American dollars. So it trades on what's called foreign ordinary shares, which explains why it's probably in Uruguay, because they have a more stable economy. They have less inflation than they do in Argentina. In fact, Uruguay is considered sort of the Switzerland of South America. And because you're really sort of dealing with a currency fluctuation, but it trades not over the counter, but as NASDAQ. So it's really kind of an interesting niche that I didn't know until I saw that question. So I think we have one more. Let's see, how are we doing? I think we're at about 74%. Let's end it and let's share our winner.
And then we can answer the last question.
Right.
I don't know
like
if they
Schwab's on a runaway there.
Yeah, I think it's probably because Kent did it, you know.
I don't know. Well, okay. I think we can give Lisa the credit on this one.
And once again, I seem to be coming up at the bottom of the heap here. I'm going to keep asking for recounts.
Okay, I'm going to close the poll here. We can go back to our slides.
Yeah.
And go ahead.
Before we do that, let's answer this last question from Carl, and he's asking. So the earnings per share and pre-tax profit lines for Dollar General are not up straight and parallel. Any idea why Better Investing would have decided to choose this company as a stock for study?
But and this is Dan. I had a similar thought when I looked at that. I thought, this doesn't look good. But if you look at the sales, they continue to be pretty progressive. I think part of it is you've got some economy stumbles. You've got a new CEO coming in. So hopefully that will sort itself out. But yes, I think Carl's comment is good. You do have some caution here. So you want to be careful, I think.
All right. Thanks, Dan.
I just noticed though, when I'm in the dollar stores, they're crowded. So I think
exactly
there are a lot more people that are worried about the economy and are looking for places to get more bang for their buck.
Yeah, that's a fair statement.
They seem very well managed.
Go ahead, Dan. Go ahead.
Yes, sir. Well, I was going to say, you just don't, when you go in, you don't see empty shelves. They've got stock there. And so they seem to know how to manage their supply chain.
Okay. And we have from the audience, George Mackey pointed out that even though MELI may be headquartered in Uruguay, he's saying that MELI is actually a Texas corporation and they file a 10K. So thank you, George, for the correction. And I think we had a hand up, or did it come back down? I saw a hand go up right when we were beginning to vote. maybe it came back down. You can, let's see if they, I'm looking to see.
Yeah, this is
Still getting used to all the differences. If anyone has any questions, they can raise their hand. We'll be able to pull you up and unmute you and you can talk.
Yeah.
Or you can just type in the chat window. Oh, Brian's asking a question. You want to take that one, Ken?
Oh, hold on. Let me get over there. Cheryl, why are the compound annual returns in section 5C
The same.
the same? And then George is also wondering about Mercado Libre being Texas.
We just talked about that.
Okay, all right. Sorry, missed that.
So yeah, I guess
to figure out the question.
Yeah, the total. It seems like the total return from the high is the same as the average, which I really can't answer why that is. I mean, the math for that is buried in behind the scenes there. But yeah, that struck me as I've never seen it do that. I've only seen it where there's a difference between using the high or the average PE.
Well, the way that will happen is when you're it happens. So your high PE is 35 and your low PE is 35. So they're going to be the exact same numbers. That's the reason why in section 4.
Yeah.
So those things happen.
Yep.
But yeah, we probably want to adjust those PEs going forward. But they'll sometimes happen.
Yeah. So Brian, did that answer your question? Your mic is able to be turned off if you want to say something.
Yeah, that can you hear me?
Yeah.
Yes.
Okay. Yeah, that's I found that out only about in the last couple months about why those two are the same, and I didn't realize how important the low PE was. Since I usually take 80% of the current price as my low price and go on.
Exactly. And that's what I did there.
Yeah, so there's what I do now is I work with the low PE when I'm in the low price calculation, and I try and get a price that's, I don't know, maybe 10% or 15% below the average low PE. I know I'm manipulating the data, but at least it gets it down there a little bit. It's still reasonable. It isn't like some of the recent severe market lows that could be down at $1,000 and completely out of the question. So anyway, that's how I attack that particular thing. It's hidden otherwise.
Thank you, Brian. Any other questions?
Not that I'm seeing.
If not, let's keep going. Let's go on.
Okay.
And
go back up here to there we go.
So there's a picture of some, but not all of the presenters that we were at BINC just a couple months or so ago. That's more than just people in Maryland, DC, and Virginia. And we thank all of our non-Mid-Atlantic friends who have helped us out over the years to take a look at it. If you want to be able to reach out to us at Digging Into BI, there's the email for us there. Or if you need to be able to reach the Maryland or DC regional chapter, they're there as well. But we're glad that you're here, and please be one of us. We're always looking for other people to make presentations, and it only is going to make you a better investor. Next slide. You can also join our mailing list. You don't have to be a member of Better Investing, nor do you have to be in the DC regional chapter. You can just go to this location. The URL is all the way up there at the top. And you can be able to sign up. We won't inundate you with a bunch of stuff, just usually educational things that are coming on. So keep that in mind. Next slide. This is all you, Kent.
Thank you. So we are always encouraging folks to volunteer with the Maryland, D.C. regional chapter or any other chapter you happen to be close to or that's close to your heart. The directors are the volunteers that run the organizations, and they're the ones that keep Better Investing focused on the things that are important, which is the investment clubs and the individual investors that are members within Better Investing. And as part of that focus, volunteers can learn a whole lot of new skills, whether it's leadership skills, whether it's financial management skills, treasury skills, as well as investing skills. And so that's a really big plus to being a volunteer within your local chapter. As helping others learn more about investing can also, well, I like to say it gives you a nice warm fuzzy feeling when I am able to answer questions and sit and listen to people and watch the light bulbs go off over their heads, or go on over their heads rather. Anyway, so some other benefits that you might see that are a little more tangible include getting discounted rates for attending Better Investing, the Bank conference that we talked about in May or April in Chicago, as well as being able to get access to the Better Investing tools for substantially discounted rate. Anyway, thanks, and we would love to have you join us. Next slide, please.
Here's what's coming up in August. We're going to have a new young startup as a stock to study. It's called Netflix, so I know many of you will want to learn all about it. And then we're also going to have XLS Service Holdings, and we still need 2 more people to make presentations. I see some of the people here in the audience, including our favorite limerick writer from Central Illinois, Steve Emmerich, is here, and he's giving us he loves his what do I want to call them? Limericks. A quartet of tickers tonight, each showing each of its own might. MELI delivers with flair. Corpay taps payments everywhere, while Schwab keeps your cash tucked in tight, and DG sells your snacks for the ride home despite. So there again, just for that, Steve, you're going to have to do our presentation. I think you're up for September, if I remember right. So thank you for being here. You can do your entire presentation as a limerick if you are so inclined. But again, we're going to be doing Netflix and XLS services next month, as well as 2 more. One of our presenters, I know she wants to do one of the utilities. We have another Georgian coming to help us out, Helen Albanese. So anyway, thank you very much for being here. We're glad that you're here. Make sure to download the materials. You can share those with people in your club or with friends, whatever. That's really it. Any other questions that we have? Okay.
Not seeing any at all.
All right.
I think we're good.
So anyway, this is where it's going to be up on Manifest Investing. I still have to update that. That's been really kind of on my to-do list of things to clean up and take care of. But anyway, that's what we have there. Again, hopefully we'll figure out this GoToWebinar and get up this one, Cheryl, and we also need to get up last month's as well. Yep. So let's work on that afterwards. Anyway, that's it, folks. Thank you very much for being here. Let's finish. I think we got 1 or 2 more slides, and yeah, there's our dashboards. And then finally, I think 1 more. That's how you can be able to find us up on YouTube, that hyperlink. But thank you for being here. Good night, all. And thank you, Dan.
Thank you. Thanks for including me. With
Hello.
the losing voice.
Yeah,
I
I know.
usually
log out here.
I usually have a glass of water right next to me just in case I always get a dry throat.
Yeah.
Thank you.
All righty.
Thank you.
I'll talk to y'all later. I've got to
Race to your
be-
next event.
Yeah, 3 minutes ago. So we'll talk
All
to you
right.
later. Bye.
All right, bye.
I believe a glass of
Thanks,
Guinness.
Kevin. Thanks, Cheryl.
A glass of Guinness will do that. Okay. You know, it's always a military man who suggests alcohol is a way out of things.
Well, after you
Yes.
give it up last century, you gotta do sometime. Hey, Kevin,
Yes,
I
sir.
sent you a text about many months ago saying that I would do the one in August, the second one that was on there, if nobody's taken it yet.
Okay. You want, so you're going to do August, and do you want to do Netflix or XLS services, or you want to pick your own?
XLS services.
Okay. Darn, I was sort of hoping to do that, but I can always be. No. You do it, because I always like hearing other people's. I'm the stock watcher in my club for that.
Oh, okay.
But I haven't done a full presentation, but you do it. I've also been looking at Netflix, so I can do Netflix, not a problem.
All right. And for which one is that, core or?
When you do the undervalued, you're doing the undervalued feature, so that means you get plus.
Okay.
You're even you're happier as can be. You get the one you want, and you get to do it in plus.
That it'll be about. I think that's going to be the first time I get to do plus.
Well, that's only because we know how well you can handle everything.
Well, I don't know that. I'm trying to get a hybrid SSG program going, and so I think that doing core, when people are first coming in, is I go back to my initial days when they put the SSG up there, and they were teaching it over 5 weekends, but at least you had the SSG graph up there, and you worked with the graph, and so you learned what was going on. I don't see that same thing with core, and so I'm trying to essentially. I sent you a copy of the reference guide that we use in our class?
Yes, you have.
Okay, and so what I've done is I've added a couple pages at the end. It's a couple of pictures that essentially takes the SSG and then shows where that information can be found on what tab and what step in core. So it's more for people that have started, and they maybe been doing it for like 6 months, and they don't do it for a month, and then they open it up again and they go, what was that supposed to be? And now it's real easy to say, okay, this one here, go to this tab and this step in core and do the education, because that part of it is way past excellent. But that directs them exactly where to go for what box on the SSG. So anyway.
Okay. Very, very good.
I'm trying to do that. All righty, sir. Excellent job. Talk to you later.
Yep. Cheryl, I think we can close things out.
Yep. And I'm dog sitting, and the dog wants to go out.
All right.
Thank you, Cheryl. Thank you, Ken.
Okay.
Thank you, Kevin.
Thanks, Dan.
Have a good night.
Bye.
All right.